Good day, guys. I hope we're good. Let's quickly get started because I believe we got limited time. So, of all the setups we're doing this week, we are going to do a recap on Saturday evening. So you just have to journal your trades as well when you execute on your side, so that we can recap on Saturday and see where, if you're still struggling, that's the best way to see where you're making your mistakes. All right, so to get started, we are going to look at going to start with C1000. So the C300. Let's see, we're going to clear the charts. Just going to remove all these markings. Let's see. Right, there we go, clean chart. So starting from the weekly, again, we do multi-time frame analysis. So from the weekly, we can see last week it sort of slowed down. I believe these could be the all-time lows. Let's confirm. Yep, so last week lows was the all-time low. Let's do this. We just want to mark the first all-time low there. That's the first point of interest we have. Then I'm going to zoom in. I'm going to mark the week of this candle. That's on price 27.20. 27.20. All right, so that's a point of interest. So for now, based on the weekly, there is a potential that this price could actually be retracing, going up, right? So that's the first thing we have. Although we are coming down, we're below the 13, we have a potential of a retracement back into the 13, and this will be a potential point of interest. This will also be a potential point of interest. Excuse me. Then we jump to the daily. You see the weekly level we have there, we're just going to adjust it, or let's rather have just two levels. I'm going to have this one as well. So we've got 27.20 and we've got 60, 26.60. 26.60. Okay, so these are the 2 points of interest where price can potentially retrace to. Having said that, the past few days also, you can see we haven't been pushing down. That means we do not have a selling bias until price maybe reacts here on the 13 EMA. Maybe we can get a short-term sell. But at the moment, on the daily, I do not have any sell bias here. So this is a day where we say it's a no bias day. So when it comes to a setup, or if you're looking to trade, you just look at H1 and you want to see, or you want to sell when your price comes back below the 13 EMA. So as it looks, or as it seems, we do not have anything here. Let me just do this, see something. All right, so H1, we do not have anything there. So C300 today, we do not have anything solid on C300. Unless price comes below the 13, then we're going to look for a potential short-term or a scalp sell. Because we do not have a bias, no bias simply means no trade. No bias, no trade. No bias, no trade. Unless we find something, or unless price gives a pattern, then whatever setup we have is going to be a short-term sell, right? So C3, we really have nothing today. We're going to jump to C5. You can see the nice setup I had yesterday. So let me explain this a little bit before we go into today's session. So you can see yesterday, it wasn't really a trading day for me. So I didn't really look at many things. But what I noticed is on C5, okay, so let me explain something about fair value gaps. I'm going to zoom in so that it's a bit clear. Right, so from this high here, we have this level and this level. That's a fair value gap right there. So price came tapped, we got a sell. From there, they left this fair value gap here as well. right? So from that fair value gap now, they also left this fair value gap here. So you can see here we had a short-term sell coming back to the 200 EMA and coming back to take out this liquidity here. Soon as that was satisfied, price started to push back up. I remember some guys were looking for sells somewhere here. Okay, there's nothing wrong with that, but you should understand that sometimes price will trickle back up. So if you want to sell from here, right, what you want, remember this is a lower high based on this main high here. So if you want to sell this particular setup, yeah, you have to wait for price to break this order block. Because remember, the 200 EMA was holding price here for one, two, and when they came, it was held for the third time. So until they break that zone, this setup will remain invalid. It only becomes valid when we break below this level. So I hope this helps for those who thought that they were missing a setup here. So price continued trickling up. They came and tapped into the point of interest. I remember I mentioned we are waiting for price to get it onto 49.60. It's not a sell limit. We are waiting first to get a proper reaction. So if it was a sell limit, then we would have been active here. But it wasn't a sell limit. We were waiting for a reaction. So if you're waiting for a reaction, usually, as you know me, I prefer H1 candles because H1 candles are higher time frame, and the higher the time frame, the stronger the setup. So what I want you to notice, excuse me, is when price tapped with this H1, we had no reversal yet. The second H1 candle was this one. So after this closes, we are not yet below the 13 EMA. So what you could have done is at this point, you want to come on M15 to see if there is any sell pattern forming right here as soon as that candle closes. So when we jump to M15, you'll see that we did not have a pattern. The pattern was forming, but it did not complete. We had this high, we had this order block here. If you see, price never came below, and again, it was held by the 50 EMA and the 200 EMA on M15. So they continued what? Pushing up, pushing up, pushing up. They came up slightly above. Then from here now, you can see from this high, this high, this high. This is the highest high, right? So if you go to H1 again, you get a candle there. So we're going to move this. We had this doji, no follow through. Then we had these candles happening here. From this doji, 1, 2, 3, 4. These 4 candles, this is where we start looking for a potential sell until the close of this candle below the 13 EMA, this candle here. This here is where the action starts. So from this high, we've got this doji candle acting as our order block. Now price is closed below the 13 EMA, and the probability of a sell happening becomes high. You get it? So once you get your high probability now, you are looking forward to execute your trade. So from this action, 1, 2, 3, 4 candles, maybe 5 with this one, which broke. If you go to M15 now, you are supposed to locate a pattern. So when you come to M15, where is the higher high? First, you locate the highest high, which was in this example, this candle here. This was the order block. Let me mark the order block right here. Then I'm going to make it deep gray so that you guys can see when it eventually gets broken. So after that, now we've got a pattern forming. From the highest high price played out. Then we've got this price action pin bar. Then we've got this candle. Here now, this is where you can sell. Price breaks, comes back to retest. So anywhere in here is where you can sell. Then you can target the day's lows. Right here, this is where you start to take your profit. If you've got any moving averages which you're trading towards, you also take profit there. You can also take profit at 20, 30, 50 pips. If you're trading with a trend, then you can aim for 50 to 100 pips if you are trading with the trend. So I just thought, let me explain yesterday's setup in greater detail so that you guys can understand as well. But I had mentioned M30 fair value gap. Nice trade there. It actually melted. It's been melting, but I've closed my trade. It's already achieved 100 pips. So that's closed now. So today, what are we looking for? So again, we want to jump to to the weekly. So from the weekly, you will see that we've been pushing up, right? We've been pushing up. If we zoom in, you can see strong push, small retracement, push, sideways move, a push. This week's candle has got no wick on the top side. We do not have a reversal pattern which is clear yet on the weekly, unless we have a bearish engulfing here. Then next week will potentially be a sell week. But for now, if we are selling, the sales are short term. You just have to sell, take your profits and wait. So you can see, like I said, weekly looks like we're still bullish, but the current week's candle is bearish, right? So let's jump to the daily. Let's see what's been happening. So on the daily now, my main reason for the sell yesterday or for that point of interest is I was looking for price to retrace to the 13 EMA. It's just as simple as that. So we've got an impulsive move, a retracement. We could get another impulsive move based on the daily candles. So for us to actually, for those who want to buy, you will be looking for a reaction here. But if you know me, the crash, I only sell. So I won't really talk much about buy setups when we are on the crash indices. All right. So what possibly might happen today is, if you notice, price sort of hasn't really touched the 13, so we could still get like a short-term sell to get into the 13, and then potentially price can push up. If we get a solid close below, we might continue getting sells going into tomorrow and coming back to this support level, which was retested here sometime last week, I think. We might still be coming here, but we need a break and a close below the 13 EMA first before we can even consider more sells. So I hope that happens. So in terms of today, price is most likely they might reject on the 13. We don't know what they will do until they do it. So this is the daily candle. It will take the whole day for us to know. So can we get a short-term sell? We might get a short-term sell. That's a possibility. Just looking at this price action here, because this looks like it's a market structure which has been broken. So because there's so many lines here, I'm just going to clear the charts again so that you guys don't get too confused. So I'm just going to clear everything from this chart. I hope this is helping somebody. So the way I'm explaining C500 is the same concept we apply on everything else. So when we complete the other assets, I'm going to be fast because of time. So from the 4 hour, if we are pushing down, we look for what? We look for supply zones, right? We've broken structure here. If you go to the line chart, you see that we've broken these levels right there. So since those levels have been broken, that sort of gives us that potential sell bias. TDI is also showing that we could potentially melt based on this squeeze, which I have right here. Okay, what's happening to my pen here? Based on this squeeze, which I have here, we are trading below the yellow baseline. We are below the 50 static outside the bands. That's showing some volatility which could happen coming to the downside, which opens us to have a sell bias. Despite what the daily chart is showing us, we could have a sell bias. So H4, we can potentially sell. Do we have any supply zone here? I would say this is a valid supply zone. This is a broken zone, which looks like it's been retested, and that gives us a sell bias. So the first zone I'm just going to mark is this immediate zone, which has been broken. If you see your price come back above this zone, just know the bullish trend will be continuing based on the weekly and the daily charts, right? Or the weekly and the daily candles will be continuing pushing up. But based on H4 right now, it looks like we can get that sell motion. We've got a lot of order blocks here. So we don't know really which one is going to stop price. But somewhere in here, price can actually target that area there. So again, we're going to mark that level. Or rather, let's mark this one. So here you can see we had a structure which was broken and retested. So that's a potential point of interest where price can potentially sell to if we're going to have a sell momentum. We drop to H1 to confirm bias. Remember, if you're using moving averages, the best setups form near 13 EMA. Best on whatever time frame you are. Best setups, they form near the 13 EMA, then price moves from there. Remember, the 13 EMA will be acting as a dynamic resistance point if you're selling. Then it acts as a dynamic support point if you're buying. So here, if you want to sell here, I would say self sells. You see this low here, the current low of today. If we can break here, then we can potentially get like uh 40 pips to the downside. So if we can get 50, if we can get 30 pips on any form of sell here, that will qualify as a valid trade. What do we have here? We've got a lower high, we've got an order block. That means we can start to look for a sell at the break of this level, right? So we've got a lower high, order block. So as soon as we break here, we can get a sell. TDI is showing us like a shark fin, so we can actually just have one runner. If you're on the charts now, just have one position on C500. It's just one position. One position. Do not go hard on this setup because the weekly and the daily could reject on the 13 EMA like I showed. But right now, we can potentially get that sell as well based on the current market price. So if you're on the charts, you can take one sell position on C500. Then as we continue with the Zoom, we'll just be monitoring that particular trade. So 0.3, small accounts, you can use 0.3. Usually if you're on a small account, 0.2, do not use 0.2. If your account is small and it's on $20 and above, start with using 0.3. Then in terms of risk, what's our risk on that one runner? The risk is to be, your stop loss is to be unfortunately above this high. So that means you're risking about 30 pips on this particular trade. Or if you want to put it maybe above the 800 EMA, then that means you'll be risking about 25 pips. So in terms of reward, if you get a break, then we can potentially get our 40 pips here. So it's more or less like a 1:2 in terms of risk to reward ratio. So one other thing which you need to know if you're trading synthetics, you see we calculated 30 pips to be the loss. So now you know that if you're on 0.30, if it moves 30 pips, you're going to lose $9. That's what you should mainly calculate when you're on a setup. So you shouldn't just rush to say, okay, it's one trade, maybe let me open one lot or let me open 0.5. It's okay if you know what you're going to lose. This is the main thing. Know how much you're going to lose in terms of pips, right? Then calculate those pips into monetary value so that you can calculate your loss. That will give you comfort whether to use 0.3 or whether to use 0.2 or maybe whether to use 0.6, depending with your account size. So bigger accounts don't really have to stress about lot sizes. Those trading very big accounts, you don't really have to stress because in terms of risk to reward, you can always make your money back. So for now, C5, I would say we do have an immediate intraday sell motion going on. If we can break below today's low, we're going to add one more position. Then this price is just going to melt with us and we'll cash in on this particular setup. So we just have one runner for now. Price can bounce off. If you have a 13 EMA, just keep track of how price will react right there on the daily chart because that will also help. So that's my view on C500. I'm just going to leave it on M15 and we're just going to leave that one position there running. So let me just, okay, the thing is I execute the trades on my phone, so I'll just be multitasking a bit. All right, so that's done. Uh, we had a nice signal shared in the group. My brother man shared a signal. Safe sales. I think he mentioned safe sales below 52.25 or 52.20 something. I didn't quite get the number, but you can see the setup he was looking at this high, which is today's highs, right? We've taken out liquidity from yesterday's high. You can see this line represents yesterday's highs. If you want to see yesterday's highs, maybe you can just minimize your charts like this. You can see yesterday's high was here. That's where price took out liquidity. Then this extended leg took out this high. So soon as liquidity is taken out, just know the next thing which will form is a nice setup. So based on that um, price action, this was the order block, right? So this guy has been following my sessions. We also have private sessions, and he's been following them spot on. So he mentioned a safe sell around about this price. You can see he was looking basically the same way I look at the charts. So we had the first impulsive move. What are we anticipating now after the first impulsive move? We also had TDI baseline here confirming, by the way. So we're now anticipating a potential or a possibility of a retracement either into the order block. That's number one. We also have a fair value gap within that order block. That's number two. So let me write FVG. We also have this broken zone here, which is lining up with the order block, which makes it a resistance zone. We also have this particular order block right there, which was the first area where price opened. So those are all points of interest. If we get price reacting there, then we'll most likely get a sell which can melt all the way to yesterday's low. This information is just based on the pattern we're seeing on M15. Are we pushing down? I would say yes, we're pushing down before I even look at the higher time frames. Why am I saying that? Is because I'm looking at the 200 EMA right here. This shows me that as long as we're trading below that EMA, it means from a higher time frame, we are bearish. So for those who use moving averages, you should know how to use your moving averages. No matter what moving average you use, don't just be excited to put moving average because someone you know or so you've seen some other trader using a certain moving average. You need to know how to use them. So in our sessions, I try to explain the use of moving averages as well. So what else can we use here besides all the confluences we have? On TDI, we are going to be waiting for something like a baseline bounce or maybe a bounce on the 50 static right there to confirm a sell which can happen here. We can also run a fib, seeing that we have a nice impulsive move. Now you can run your Fibonacci there. We wait for a retracement into the 38.2, 50.0, 61.8, or 70.5 zones. All those areas are lining up with one, this first point of interest, two, this second point of interest, three, the fair value gap in the order block, and number four, this tiny order block right there. So basically, this is how you need to approach the market, especially if it's trending, right? So for now, I would say my point of interest now for C1, I actually missed this impulsive move. So my point of interest will be anywhere from here to here. I'm waiting to get a candlestick, which I know, or a candlestick pattern, which I can recognize before I execute a sell. Where am I going to take my profits? If you're using a fib, usually depending with your entry, if my entry is around the 61.8 area, I start scaling out right here on this level. Then I'll leave positions to run to TP1, sometimes TP2. Sometimes price does not get here. That's one thing you should know, which brings us to the point of calculating your pips. So most of the time you hear me say we only target 30 to 50 pips, maybe to 100 if we're trading with the trend. I have people always asking, where do we put stop loss? Where do we put stop loss? On every trade you take, whatever you trade, you should put your stop loss outside the range. What it means is this is the range right now. That's the dealing range whereby price can keep moving like this. That means our stop loss is to come outside the range, right? That's number one. Number two, depending with how price reacts here. If we get a nice pattern here, it means our stop loss now, instead of coming outside the range, it might come outside this order block, or it might come outside this order block. Then as price is moving, if it moves halfway towards your target, you move your stop loss to break even, then you keep trailing because price can do anything. So always make sure that you put your stop loss outside the range. Because sometimes when you ask this question, I won't respond because I've been talking about it ever since for a long time. It's the same concept, same trading system we use. So always put your stop loss outside the range. I've already explained what a range is. Sometimes, depending with how the pattern will be looking, you can use the 5 minute time frame to put your stop loss. So let me see if I can explain it best here. So on the 5 minutes, remember there was a sell signal shared maybe around 52.25 or somewhere here. It means the stop loss is to come out. This is the last high you see. That's where the safest stop loss can go. This means if a person who sold here, if they're still holding this trade, if it retraces up even into the 70.5 and then drops, it means they are safe with the stop loss outside the range. You get it? So each time you want to put your stop loss, or each time I share a signal, because sometimes remember I'm multitasking and sometimes I might be managing multiple accounts. So I can just come and drop a signal and say, we're selling C1000. Just know that from that price point which I've mentioned, if you look at your own charts, go to M15, M5, look at where the last high is if we are selling, then put your stop loss there. So since we've shared this information, you won't hear me share it again. So I hope you guys will be taking notes as well because we talk about this almost every time. So C1000, that's the main point of interest. So maybe someone might be saying, why are you not looking at the daily? Why are you not looking at the weekly? So let's go at the daily. At the daily, you see we're trading below the 13. We've got a selling motion. The only thing which I see is yesterday price sort of slowed down. You can see that sort of like doji candle. So be open to see price still push up. That's simply what it means. But as we are looking at these candles, we have a sell motion going on. So that gives us a sell bias. H4, we look for supply zones. What supply zone do we see here, or what order block do we see? So from the left-hand side, you will notice that this is the supply zone we see right here. Price is actually tapped into that zone with a sniper entry. If you zoom in on your H4, you see that they tapped right there. So for those who are confident now, you take your sell right there. Your stop loss now is outside the order block. This is a higher time frame and this is a big distance right there. So that's where your stop loss goes, outside the order block or outside this main range which we have. Then this would be most likely a consolidation and we can most likely get an impulsive move to the downside. So that's multi time frame analysis. That's where it comes in. Then H1, you have to be below the 13 EMA. Simple as that. So as you can see, we're trading below and we are looking for price to potentially come and react somewhere in there. If we do get that reaction, we are going to take ourselves. If we don't get a reaction, price will do what it does and we won't be in the trade. So I hope this information, guys, I hope it's helping you. I hope you're taking notes. So C1000, that's my analysis. We're just going to leave these points of interest, run your fib, and we just wait for a reaction. So that's it for C1. C5, just checking. Looks like price wants to sell, right? If you're confident with what you're seeing, remember, you don't have to trade what I say. You have to trade what you see. So from what I see, I feel like we could actually get a drop. So if your trading edge is showing you that a sell is in motion, the pattern is there, just take your trade. I think I've shared some videos from Mark Douglas as well. He says the same thing. It's not like we are guessing here. This is not guesswork. We are looking at what price is giving us and we are trading based on that. We've seen this pattern pay us more times than not. So we can just execute. Either the trade will pay us or it won't. So if you see a pattern, the only thing you can do is execute, then wait for it to play out. All right, so that's it for C1. B1 for me, I feel like they've moved from this price action I'm looking at. If I'm to open the daily, this daily candle should be solid green, or at least it should have a huge we should see a big green candle on the daily. So this comes from just knowing price action. So from M15, I can already tell you that the daily candle is almost looking like this. So if we go to the daily candle or to the daily chart to check the daily candle, we zoom in. There we go. You see that daily candle there. You have a small wick, small wick. So I feel like we've pushed up and this price could actually continue pushing up. But at the same time, we're not sure if this price wants to you see, we trade its price is on the either side of the 13 EMA. So this is now a dealing range. We are also trading within yesterday's range. So for the best setup here, what you want to do is you want to buy outside yesterday's range. This might potentially be a good trade for tomorrow. Why I'm saying tomorrow is because if today's candle closes wherever it closes, as long as it's above the 13 EMA or maybe above yesterday's high, it will mean this is a rejection of the 13 EMA and we're going to get more buying days starting from tomorrow, maybe until Wednesday. You get it? Is we're looking for a pattern like this. You see, after this rejection, you get 1, 2, 3, 4 days of bullish move before price consolidates. Same applies here. We get a rejection. We get 1, 2 days of a bullish move before the market goes sideways. Same as this rejection, we got one bullish day here. So that's the main thing. You just want to check your daily. What is it telling you? If there is no information, then you just wait for the current daily candle to close before you execute. So I would say the best setup on B5 is to be outside yesterday's dealing range. So yesterday's high, yesterday's low. Right, that's the range we have for now. That's a point of interest. If you notice, you remember last week we mentioned price might retrace to this level. You see, we still haven't touched that level. So two things can happen. Since we've taken out this liquidity here, price can still then push up, maybe come up here, create new highs, then maybe drop, maybe continue pushing up. These are just possibilities which will be running up in our head based on what we're looking at. Then we can still have price even come back down, tap here before we actually push up. These are all possibilities. But based on current market price, the daily is looking like this. And if we are to go back to M15 from where the price started, you see that we potentially miss the best trades because this price started moving in the early hours. We had the lower low, we broke an order block, we retested, we pushed up, we pulled back, retested the 13 EMA. We didn't quite get into this zone. We pushed up again, we retested this level, we pushed up. So you can see now that's 1, 2, 3 areas already, or 3 setups which have already transpired. So yes, you might want to continue buying, but personally, I would rather wait and see how they're going to deal with yesterday's high. So there could still be a short-term buy maybe coming into yesterday's high. But remember, again, the day is still early. We might get a very deep retracement all the way back to this level, which was not retested. Then potentially maybe we can look for a buy from this area coming back up. If you've got moving averages on your chart, just wait for price to maybe come tap into the 50 EMA, then look for a short term buy. Why is it a short term buy? Because price has already moved for the day. So we don't want to keep chasing price. If you want to buy a current market price, where is your stop loss going to go? Remember, the last low which you're going to see will be here. So this is a huge stop loss based on the target. You see, the risk to reward does not balance. But those who want to chase price, they can still buy this. You can still have your profits. But based on my trading system, I cannot buy a current market price. The only base points I can buy from would be, like I said, this broken zone, which was not retested, which is almost close to the 50 EMA. So for now, I'll say that's my only potential point of interest. Yes, price can push up, but from here, I do not have a clean pattern. If I have something solid, maybe price will show me something which I can use. I might use it. But again, from here, you can also see from H1, this is the order block which price is left. So that's also a potential point of interest for buys right there. Worst case scenario will be price coming to this gray zone, which I just marked from the M15. But otherwise, that's it for me from B5. Then B1, I can see we left with only 4 minutes, so I'm going to rush through this one. B1, yesterday, I think I mentioned I had no buy setup at all. But if you noticed, I think the time we were looking at it was this time, and I had this level marked. And there's this high here, which I had not extended. It looks like price almost came to tap into it. Safe buys only happened after price broke the order block and retested. For those who were stoking price, this would have been the safe buy, and price came back above the 13 EMA, right? Then they played out. So looking at it today, what do we have? Again, it looks like we're pushing down intraday. Daily charts, what do we have on the daily? Daily chart looks like we could be bullish. It could play either way here. Based on what the candles I'm looking at, we could push up, we could push down, because now this inverted hammer, usually after you see it, sometimes price will retrace, and this looks like a liquidity hunt right there. So chances of this price coming down are there, chances of the price going up are there. So this is a 50-50 in terms of bias. Price can go either way. So if there is no bias or if there is confusion, just wait for price to come above the 13 EMA. Like I said, for example, here we came above, then bought. If we get a rejection here, we can get a short-term buy. But as long as we're pushing down, I have nothing. Maybe we might get a reaction here on the 50 EMA. So that's the only order block which I can confidently mark. But at the same time, just know that from the daily price can potentially be retracing. So we're not really looking for buys. We're just patiently waiting to see if we can get a reaction. So if we get a reaction, we can get a short-term buy. Remember, price will be below the 13 EMA at that time. That's why I'm saying it will be a short-term buy. But if we do come back above the 13 EMA, then we'll get some good buys happening here. But I'll advise you guys, because I'll be actively on the charts as well. So I'll let you know what I'll be doing here. 2 minutes left into the session. Step index is bullish from yesterday. I'm not sure if anybody caught a buy, but I was in some buys actually here. I took some buys. Where did I take a buy? Uh, I'm not sure where I took a buy, but I was in a buy yesterday. I took a buy, although I didn't share it, because Sundays I rarely share setups on a Sunday. So there was a buy motion happening. Price came back to this level. I would say for now, I still want to see what they want to do, because it looks like they're going sideways. Although I'd say I'm still leaning on buys. Based on the daily, I want to see price come touch the 200 EMA. I want to see price come touch this red line here on the daily. So if you're on the daily, you can see the candles are marking based on time. I won't give you the exact prices, but just mark those levels. I'm in a buy motion. Why? Because from this low, which took out this liquidity, we've broken an order block. So the buy motion is there. If you get any buy setup, execute it without fear, and we'll most likely get to 82.90. That's it for step J10. I don't think we'll have enough time to explain J10, but let's see. Based on the daily, we are right on the 13 EMA, which is also near the 800 EMA. So we're between the two, which means price is sort of like it will be consolidating until it breaks out on either side. So for this, I'll say let's wait. We'll only trade it tomorrow. So that's it for me today, guys. We are praying for a good week this week. Please record your trades. Write your trades down. On Saturday, we're going to have a recap. We check where we made mistakes. We check where we took profits. C5, you can add one position there before we close. And that's it for today. The rest of the things I'll just mention in the Telegram group. So thank you so much, guys, for joining. Enjoy the rest of your day. Good trading.